Hello, everyone. Welcome to this month's Founder Spotlight. We're very honored to have Tay Nguyen here to be our guest speaker. He's joining us from Colorado. Hi, Tay.
That's, hey, Hui, nice to be here. Thanks for inviting me.
Yeah, it's great to have you. I know it's a little bit cold here in Michigan. I don't know how the weather is like in Colorado, but is it nice and warm or is it getting cold?
No, it's pretty cold. I've walked the dog this morning with my brother-in-law, and so there's like 3 or 4 inches of snow on the ground, about 25 to anywhere from 25 to 40 degrees today. So definitely moving into winter.
Wow, snow already? Wow, this is late October.
Yeah.
That's that's the time when snow usually comes when I was growing up. I thought, with climate change and everything, it's like a little later. Uh,
No,
so,
that definitely snow. My dog was very confused.
well, welcome to the show. Just a little start when we start out these interview sessions. We want the audience to get to know you a little bit. So, could you share with us your story, how you got to the U.S.? I'm assuming you were born in Vietnam.
Yes, I was born in Vietnam, 1972. I was 3 years old when my parents left Saigon as the communists were taking over the city. We were really fortunate. We had a friend, my mom's friend, who worked in the US Embassy. And so she was able to, and I don't know the exact details, but able to get us onto an US Air Force C-130 transport that was taking immigrants or taking refugees out of the country. So I got out in 1975. My dad also came out, but instead of he didn't catch the U.S. Air Force transport out. He was found his way onto the ships, the aircraft carrier USS Enterprise, and so we were separated. My mom, my grandmother, myself, and my brother and my uncle were in one group going on the C-130 transport, and my dad was on a ship. And my parents thought they had basically forever lost each other because my mom didn't know if my dad made it out or not. But thank goodness, and very blessed that they were able to run into each other in Fort Chaffee in Arkansas at the refugee camp. So grace of
Oh,
God and luck, and so
wow.
it's an amazing story.
That is an amazing story because at the time there was at least three or four different refugee camps, and for you guys to convene, we meet each other at the same refugee camp is amazing. I know at the
Yeah.
time, a lot of families they split up as well. As at the time, you didn't know who was where, and you didn't really have time to react. And so, the primary objective was to get out, right? So
Hmm.
whoever got out, and hope that other people can get out, and you meet up.
Yeah.
So,
Yeah.
there was camps, I think, in California and Pennsylvania, in Arkansas. There was also, I think, Florida, and Indiana, if I'm not mistaken. So there was refugee camps all over the country, just welcoming refugees like us to come to the U.S. So how long were
Yeah.
you in the refugee camp in Arkansas?
I actually don't remember. I was too young. So we were in the camps, and then we got relocated to we were sponsored by a Catholic church in Orange, Texas, which is a little town on I-10, the last town in Texas before you enter Louisiana. And so I grew up in Orange, Texas. So I'm kind of a small country, town boy, and really enjoyed growing up there. And and it's a lot. It's a lot of the immigrant story. My mom worked at Pizza Hut and Taco Bell and Long John Silver. Just trying to make enough money to keep food on the table. My dad was trying to go to school so he'd get a college education. Never was really able to focus and concentrate and learn the language well enough to be successful in college. So he ended up, working at as a pipe fitter at a shipbuilding factory, as a draftsman, and just other, more blue collar jobs. But they always took care of us and made sure that even though we lived on food stamps, we lived in government housing. um, we were always well fed. We were always taught by my parents to put education first. And I'm sitting in my sister's 6 bedroom house in Denver. And I have a house in San Diego, and and I have there's 5 of us siblings together, and we've all been all college educated, and all very successful, in our professional careers, thanks to a lot of the values that my mom and dad taught us.
Yeah, I mean that's the amazing part of it is like they gave up so much to give us the opportunity. In some ways, the more sacrifices they made, it seems like there's a reverse, there's a correlation to the success that the children
Yeah,
experiences. So
yeah, one of the yeah, definitely.
yeah. So you guys relocated to Texas and then you guys went to school in Texas before you started having your entrepreneurial bug and went to California?
Yep. Yeah, I actually uh, got a academic scholarship to Texas A&M, so I was all ready to go to University of Texas, and then I got a letter in the mail saying, come to Texas A&M. Here's a lot of money. I was like, we're like done. So I ended up at Texas A&M. Was fortunate enough to be in the honors dorm, where I met my roommates and then my future business partners. So we were all in the honors dorm together, living in the basically the beginning and in the middle of the .90s internet boom. So
Yeah,
my
I remember
roommate, my roommate had to go to California, San Diego, because his wife at the time was going to med school in San Diego. So he went out there, and then we always kept in touch. And in the late '90s, by the time we had started our careers and were quote unquote professionals, we said, let's try to do something together, take advantage of the internet, the internet boom times. And so Jordan wrote a pitch deck together because he had been working at mp3.com to really, take media to the next level on the internet. So he was working in MP3 and music, and he saw the same opportunity, at the time, late '90s, for video to be very important on the internet. So we got together, all moved out to San Diego, and started DivX at that time.
Yeah. So you guys were all in engineering at school at university?
Um, Two of us were. I was an aerospace engineer. My roommate, Jordan, he was a he was a philosophy major, philosophy, political science. He went to Harvard to get his law degree. And then the other roommate, Joe, was a mechanical engineer, but he really specialized in, marketing and branding.
Yeah. So tell us how this idea to form DivX, like how did it come into fruition? How did it come to be? Did you guys sit and brainstorm and say, like, we got to do the startup and then figure out an idea for a startup, or did you guys encounter problems like usually problems of your own that caused you to want to have a solution, like uploading media that was too slow,
Mhm.
or what was the impetus for DivX?
Yeah. Yeah. I think a lot of it was Jordan's experience at mp3.com. So, at that time, and we all remember, or at least those of us who are of a certain age, remember the warbling tones of the dial-up modems and
Yes.
trying to get files down. And so
Hmm.
you were always constrained, in the early days of the internet about with how fast your connection was. And we're talking 56 kilobits, per second, as opposed to a gigabit, right? Like several orders of magnitude. And so it became really important to be able to compress the information as much as possible because we were using such small pipes. And MP3.com, they worked obviously with music compression technologies, and MP3 being the primary codec. And Jordan, saw an opportunity, for video to have that same type of transformation and adoption on the internet if you could get it through the small pipes at a time.
Yeah. So then he just got an engineering team together, or I mean, how did this come about? The kind of the engineering codec that the backbone of
Uh,
DivX, how did that come about?
Yeah, so we all had our specialties. Jordan was more on the business strategy and kind of big market side. Joe was on the marketing and branding side, and I was on the more the technology and engineering side. And then we had two other really, really important co-founders too, Jerome, or Jej as we called him, who was basically working in France at the time as a video enthusiast and I think a film creator. So he was very familiar with DivX in the sense that he actually built the first version of DivX by cobbling together some off-the-shelf components and creating a video codec that was using other technologies that was basically integrating and interoperable to create small enough files that he could use them in his daily life. And then the other person that was very important in DivX was the other co-founder, Darius, who was also a friend of Jordan's from Wall Street. So he had a Wall Street background, trading background, and also was prior to that a Navy SEAL. So extremely good at creating tactics and small team, kind of leadership that we needed as a small company. So that was that was kind of the genesis of the core founding team.
Yeah, so you went on the typical track where the founding team created the product first, right? And then
yes.
So how long did it take you guys to create that product, that codec, before you started commercializing and releasing it to the public? I mean, I know one of the strategies that you shared is that you guys went to consumers first instead of going to the commercial track. Yeah.
Yep. So we had to create basically, Jej had created a version of the codec that was using other technologies that weren't ours. And it was kind of free and out there in the wild just to use because he was more of an enthusiast. When we started the company around it, we had to really start from a blank sheet and really restart the codec so we could build intellectual property around it. And so we went on kind of a recruiting whirlwind tour and hired the best codec engineers that we could find from all over the planet. So we had a super smart kid who was at the time working in his parents' basement in Dallas. We had an Italian, just an enthusiast, someone from England, someone who's working in China. So who was Chinese, but he was working at one of the labs at UCLA in video compression. So we pulled together this international rock star team of just very, very smart guys and used all of their learnings and their experience to build the first version of the codec. And that probably took us probably within the first year, we had DivX 4.0. We were at 3.11 was kind of the cobbled together version from other technologies that we really couldn't use as basically the technology stack for our company. So they built the technology for DivX 4.0 probably in about a year.
Wow. I mean, how did you recruit these guys? Did you guys have funding at the time, or was it more of the story, the excitement of building something new, or it was just personal relationship with these guys? How did you recruit these top-notch engineers to build the codec?
Yeah, it was a little bit of it was a little bit of the times, right? It was the startup kind of craze. So everybody wanted to kind of get on the train. So I think that helped. We did get funded. We were able to raise, a $5 million Series A at the time. That's what they called it. Would probably be called a seed now, but a $5 million Series A to build out this version of the codec that was licensable, commercial and licensable. And also we worked really hard on creating just a culture in the company that was really, and I know it sounds kind of prosaic now, but work hard but play hard, right? So we really held on to kind of the core values that we're all really smart guys. We all love what we do, so we'll all work really hard, but we'll also enjoy each other's company and have a good time doing it. One of my favorite traditions at the company at the time was we called it Beer 30. So around 3:30, 4:30, sometimes 2:30, we would have a beer cart just be pushed around the floor, and everyone would pick up a beer, and it was Beer 30 on a Friday. And that was a signal to basically, because we all had pretty good PCs with really nice video cards, we would all fire up Unreal Tournament or not Call of Duty, but the other one, Battlefield, Modern Warfare, and we'd play games with each other for an hour or two before we went home.
That sounds like the culture part of things that became really famous around the world. The kind of Silicon Valley culture: play hard, work hard. But let me back up a little bit. You guys raised a $5 million round. There was an existing codec on MP3. I mean, did you remember the deck? What was the kind of like the standout, the kind of unfair advantage that you guys have to convince investors to put $5 million in
Yeah.
into developing a technology where none of you guys had that background? You had to go recruit people with that background in terms of the
Yeah.
engineering.
Yeah, it's a great question, and I'm still kind of befuddled to this day. It's about how it was actually raised. I actually have the. It wasn't a pitch deck. It was an 8-page document that basically laid out the business strategy, the markets that we're going into, and it was written, just as single space document. And so the investor actually had to read the document, could just flip through the slides and look at the top 3 bullet points. Jordan is an amazingly articulate person. So he obviously as a lawyer, he's trained in logic, he's trained in presentation, he's trained to present arguments in a very convincing manner. And I think a lot of it was just his ability to convey not only his vision of the future, because he could see what was happening in music and know that was going to happen in video also, but also behind that vision, a very, very sound business plan. And and a lot of correlations to what was happening in the music space would and did actually carry over to the video space in terms of the adoption of media consumption over the internet.
Yeah. So I mean, was it institutional investors? Were they angels?
Yeah,
What was this?
it,
This is
it was
institutional.
it was yeah, it was a offshoot of DFJ's firm that was based in LA. Zone Ventures was the name of it. And so it's Zone Ventures, and I think they were like an offshoot of DFJ from the Bay Area.
So was this just a personal network of Jordan's, or was it did you guys go hunting for investors?
Oh, it was, and Jordan did a lot of the legwork, and it was basically knocking on doors, lots of doors.
Yeah. Yeah. So at the time there was no existing compression technology for video, just mostly music, or is it could you give us a
Well, there,
landscape? Who are you guys competing against at the time?
yeah, there are lots of video compression technologies, which is, I think, a lot of reasons why the door got closed in our faces a lot when we were looking for funds. There was Real Networks, there
That's
was
right.
Microsoft's codec,
Hmm.
there was, and I don't remember all of them. There's like a whole bunch of them, at least a dozen out there, just vying for, attention and vying for adoption by the broader internet community.
Yeah. So what were they all going the corporate route, getting the kind of the B2B model where they would license the codec to them? Is that the model that your competitors were using at the time?
Yeah, many of them were doing a straight licensing, to basically the B2B play to businesses and to PC manufacturers and software vendors and things like that.
So the market penetration for these competitors was like high. So what was your entry point? What was DivX's entry point? How did you guys compete in a crowded market like that?
Yeah, so we and Jordan, thought of, and from a strategic standpoint, thought of it as kind of the virtuous cycle. So for adoption, and it's a lot like this in a lot of industries. It's kind of a catch-22. You can't have adoption if you can't have content. You can't have content if no one cares about your technology. So how do you basically jumpstart that equation? So, and that's why we went to the consumer route. We were going to jumpstart that equation by going to consumers, and we knew that consumers, because Jej was one of them, would create video, whether it's your at the time Super 8 video, or whatever type of video you were shooting or had a hold of, and you wanted to basically give it to your friends. So we created a codec that was usable on PCs and Macs by very, very normal people. That we made it as easy as possible to compress video at the highest quality level that you can using the technology at the time, and put it in a format that was accessible by the masses. So that was basically our strategy to have content created. Now,
So
with
YouTube
a free,
wasn't around then back then?
nope,
Not
Nope.
yet.
No, YouTube came, I think, around 2005
Six,
or
seven.
six, and we actually, yeah, we hadn't actually had a competing product to YouTube, so at the time too, and that's a different story. But when talking about core video compression codecs, we targeted our codec at basically the consumer market and the enthusiast market.
Yeah. So basically, you use yourself and people around you who like to make videos, and then it got passed on a word of mouth type of promotion.
Yep, yep, and it was free. So going after consumers, we had a free version of the codec, and then we had a very inexpensive $20 version, I think, at the time of the codec, which had a couple more features. But in general, we knew that we were not trying to make money off of software sales at the time. We were just trying to create content in the early days of the company, content in our format.
Right. Content in your format. So then you kind of force the players to kind of adopt the codec as well.
Right. When there was enough content, and consumers drive any business, right? So if you have enough consumers, and whether it be eyeballs or video in your format, then you can actually use that as leverage in business to get people, the business side, to adopt your technology.
So with 5 million, did you guys have a game plan? We're going to do this free route, target enthusiasts and consumers for a year, and then get to a certain level of usage, maybe 1 million. Is that downloads, or was there any metrics that you guys gave yourself as key performance metrics for you to track?
Oh, not really. Yeah, we were, five guys who were relatively young in our 20s, and you have to remember this was early 2000s, so a lot of the things that have been metricized and codified kind of in the industry as best practices didn't exist back then,
Right.
and don't have like the sophisticated tools to do all of them, ad tracking and all of that. I still remember munging through raw Unix logs for getting our website stats, right? So we were, just like I said, just push hard as we could, and we had had a saying, like, you just have to have a modicum of competence, right? So you just have to be smart enough to kind of separate, what's valuable from what is noise, and then use that little bit of value to make your decisions. And so we, in the early days, ran just really hard and fast. And obviously, we were funded in July of 2000, and we opened the office in September of 2000. And then 1 year later, we had 9/11 happen, which basically pulled the bottom out of the entire startup market, all of our plans, and we had to adjust and pivot properly to be able to survive and get our second round of funding through kind of the 9/11 downturn.
Wow. So you guys were trying to raise money already a year after getting your first round?
Yeah, we and it's pretty common that the VCs, they give you money not to put it in a savings account, but they give you money to go build something, to buy talent, to build something. That's what we did. We hired all of those engineers. We got some office space, and we were pretty frugal at the beginning. We had cheap desks, cheap chairs. We spent our money on, like I said, PCs and video cards to make sure that we could build technology. And come a year plus later, we were out looking for our second round, our Series B, and that was right when 9/11 happened.
That's like I had to like remind myself 5 million in the US is different than 5 million in Vietnam. Because that's unless you're in hardware, 5 million in Vietnam goes a long ways in terms of building out a team a couple years. But you're right, in Silicon Valley and the engineering talent you guys went after, that would probably eat up your burn rate's probably very high. So then, what metrics do you guys use to go raise your Series B? I mean, there had to be some metrics that you guys had to use to show progress, right? Was it downloads?
Yeah,
Was
I
it?
wasn't. Mhm. Yeah, it was. Yeah, it was. I wasn't, and I wasn't involved in series. I wasn't involved in the fundraising all that much. I was mostly working on the engineering side, keeping. I was the guy who kind of sat in the labs and in the offices and kept all the teams running while Jordan and Joe and the other guys went out, to basically ring, knock on doors, to make the cash bell ring.
Yeah. So was there any moments when you look back the first 2 years that you were like, the founding team was freaking out either because the product wasn't ready or there was no, money was drying up.
Yeah.
Was there any moment where there was just like, are we doing the right thing or should we have taken that six-figure engineering job?
Yeah, absolutely. You'll always have doubts and you always have fears, and so my wife and I moved out to San Diego, and you know, and I had a great job at Accenture. So I was working at Accenture, working as a consultant and working in the oil industry, which was booming then. But we decided to take a chance. And it's like, let's go out and see if we can take advantage of this internet kind of phenomena and be a part of this, kind of crazy, unprecedented time with the expectation that we would run out of money after a year and, my wife and I would move back to Texas and I would continue my consulting career at Accenture. And that's how we looked at it. We had nothing to lose and everything to gain. And so there were times when things during those first year, particularly, raising through 9/11, because it was just a trying time for everybody, that, we had our doubts, but we always just kept pushing forward and kept saying, what's the worst that can happen, right? We all, we're all, very, we have all opportunities to do something else, but let's go ahead and put everything into what we have together. uh, Obviously, because we were roommates, we basically came of age together. We lived together from 18, the three of us lived together from 18 till, 22, 4 years in college, very formative years. So we had great friendships, great loyalty to each other. And that helped a lot in just terms of being able to persevere. When you're going through it with your friends, it's a lot easier than just going through it by yourself.
Yeah, definitely. So, I mean, in terms of maybe talk about the highlights. What was like looking back? What was like the kind of the pinnacle? Was it when you guys got listed, or was it because when you got a certain number of downloads, or was it because when the big players like they recognized DivX as the preferred codec? What was it?
Yeah.
What was that point where you're like yeah, we made it.
For me personally, it wasn't actually the IPO. What I was most proud of was when we were able to move into our new building. So it was about year 5. So we had gone through, 9/11 made it through, and we were actually starting to build up a pretty good business. We're starting to sell to consumer electronics manufacturers, and that really gave us enough just profitability and cash flow to move out of our really dank, stinky offices, which was, it was in a 1950s complex in San Diego called General Atomics, which, by the way, is a great complex. It's just the buildings are 1950s, but it was a fantastic place for us to be incubated. But we were able to move into a 2-story, I think it was 40, I want to say 40,000 square foot building, 20,000 on each floor building, and we were able to spread out and have an engineering corner, a marketing corner, a accounting finance corner, able basically to have a real kind of fun office place. And I think that really was a sign to me. It's like, oh, we made it. We had our sign on the side of the building that you could see from the freeway.
Yeah, that must have been really satisfying. I there was a company that I invested early on, and the guy he went to engineering school in the U.S. and went back to Vietnam to start a electric motorbike company. And when he first started out, he used his parents' ground floor hotel space as the in Vietnam, they're required to show, in order to get a manufacturing license, you have to show them that there is actually a line, an assembly line. And so we had to find a way to put together an assembly line on the ground floor of his parents' hotel. And he was able to get the license and he got funding. And then a couple years later, when I went to meet him in his office in Ho Chi Minh City, because I had been following his progress. And you know, you go to this building and like you said, it was like this huge space. There's different departments. And now there's actually a cafeteria, you know, an area where there are ping pong tables. And I think he would agree with you that that's probably a very satisfying moment when he can look around and say all that hard work came to fruition when you can see a real company functioning with different, you know, departments working together. And there was a research department, there's an accounting department, there's a legal department, there's a sales department, and social media. And that just kind of like probably it's like a flip of the switch and you're like, okay, the lights are on now.
Yeah, yeah, yeah,
Well,
exactly. And it was fantastic when we moved into our building, and we had to decorate ourselves, so it was very funky, you know, kind of modern building, and with made in the way that we, you know, as part of our culture and part of our, you know, our company identity.
yeah. So then what was there when you guys went public, was it like a financial decision because you guys wanted an exit, or was it the investors that wanted to say it's time for you guys to, because you were 6 years in, if I remember correctly, right? You went IPO in 2006, which is, you know, relatively a shorter time frame than most startups, right? You know, at the time it was like 7, 8, maybe 10 years before you got listed, and you guys got listed on the Nasdaq in 2006, 6 years after the company was formed. So, what were the driving factors behind uh, getting listed?
Yeah, so I don't know exactly the details of the conversations because I wasn't on the business side too much, but we knew from the beginning that we would have to have an exit, right? That we would have to basically show our investors some return on their investments. And so I think that we were always, and we wanted to, you know, we had offers to basically M&A offers be bought out by other, you know, bought by other companies. But we wanted to, you know, at the time, you know, our thinking was we wanted to control our own destiny. So, you know, our exit would be an IPO. That way we could stay in with the company and continue to move things forward in the way that we saw it. We were very idealistic, very, you know, kind of Jordan was a very visionary, and there was a lot of things that we were going to do beyond or wanted to do beyond all the technology we had developed at the time of the IPO.
Yeah, but then I think you guys decided to leave after the IPO. Is that right?
Yeah.
So,
Yes. And
you
so
know,
that was
going in, you wanted IPO so that you can maintain control and stay on, and then you IPO'd and things changed. What happened?
yes. So things did change, and this is part of you know, at least for me, it was part of the naivety at the time. You know, we had worked really hard. We had kind of built up this culture of, you know, like I said, work hard. The rewards will come, and a lot of it was like around long-term investment. You know, it's like, you know, we took like 6 years to get to where we were, and there was like a nice, you know, payoff for the, you know, the investors, and they had a very good outcome. And we wanted to do more visionary things beyond that. And this is where, you know, the story of YouTube really kind of comes into play. Our, you know, YouTube was just starting around that time also, and so we had seen that, and we had been watching, you know, very closely, basically UGC, user generated content, being a force in the internet, right? And at the time, there weren't the millions and millions of videos and things that there are now. But at the time, you know, we saw that this world that we live in today would be the eventual outcome. And so we were positioning to not only be the compression company, the technology that creates the video, but basically like YouTube, the distributor of high quality video on the internet. And we had a product called Stage 6 at the time that was just that. It was a user generated content portal where people could upload content and distribute it very much like YouTube did or does now. But instead of the very low quality, kind of 640 by 480 or even 240 by 480, postage stamp type video, Stage 6 at the time supported high def. And what really caused a lot of the friction in the company as a public company was the amount of money that it took to run Stage 6. And the investment that we were putting into it to be able to build it out to be a user generated portal, the user generated content portal on the internet. And so we had a very, very nice, very safe, comfortable consumer electronics licensing business line that just made a very profitable, very high margin. Our technology was adopted by Samsung and Sony and LG and all the big CE companies. So we were getting licensing revenue from that at a very high margin. What we wanted to do was take that money and reinvest it into user generated content portals and becoming a distribution outlet for user generated content. That investment showed up on our P&L as a huge loss, right? Because we were paying for bandwidth, we were paying for engineers, we were paying for server infrastructure, we were paying to fight lawsuits because the DMCA didn't have any precedent set by it yet. So we were, having lawyers, trying to use the DMCA, the Digital Millennium Copyright Act, for those who don't know, which provides these safe harbors for these entities to basically, if you're doing user-generated content, it removes the burden of copyright infringement from the platform and pushes it to the user, not the person who uploaded it, not the person who is hosting it. So that was in the DMCA, but the legal precedent hadn't been set yet. And so we were having lawyers trying to fight through the cases to set that precedent.
Yeah.
Long story short, all that's super, super expensive. And it looks really bad to Wall Street because we weren't, our earnings per share was like going down tremendously because we were trying to invest in this next vision. And we weren't really doing it in a way that satisfied kind of the Wall Street metrics and analysts. So that was where we realized that, our flavor of entrepreneurial spirit wasn't very conducive to the expectations that Wall Street had for the company, which Wall Street expectations were very similar to like Adobe licensing company, very safe, just kind of throws off cash. And grows incrementally year over year by enlarging the penetration in the consumer electronics devices.
So did the core team, the founders, break off and try to pursue that vision of Stage 6, or what happened?
Yeah. So there was attempts to basically split Stage 6 off as a separate business entity, get separate funding for that, but a lot of that was mired in kind of the economic times, and this was getting close to 2000, would be close to the credit crunch. It was one of the financial disasters in 2008. There were a lot of them.
Yeah.
So we were always beholden to, and again, this is a good lesson for us, that I take now as as someone who's gone through this. Is a good lesson is always pay attention to the macroeconomics, the times that you're living in, whether they be like the pandemic, which we all just recently experienced, or 9/11, or the housing crisis, or the credit crunch in the early 2000s and middle 2000s. All those affect very much your ability to operate as a startup business and to raise capital and to hire.
So looking back, what could you have done to survive? I mean, YouTube went through that same time period. They didn't have the expectation. They weren't a public company, but you guys tried to take Stage Six private. Were there things
Yep.
that you could have done differently, looking back to you could have been the YouTube of the world,
Yeah.
given your
Yep.
compression technology and you're leading the video media space at the time.
Yep. So YouTube was successful, and I think, personally think it was successful once it was acquired by Google, right? And what does Google have? A lot of lawyers, a lot of industry credibility. Google, was and is a large enough name to be basically credible in courts, in business contracts with studios, in all of the relationships and all of the things that you have to basically say, well, here's the law. I have enough lawyers and they did, to basically fight the cases, to create precedents for the safe harbors in DMCA, to allow content creators to be able to put up content that they created and disseminate it over the internet. And Google's end game, as you all know, is basically eyeballs equals advertising dollars. And so they were very invested and had a very large war chest to spend on that. Looking back, perhaps we could have looked at a partnership or someone to buy that unit that had the basically the war chest to be able to set those precedents for us. We weren't, we were strained, we were straining our profitable business line by trying to reinvest, the cash flow from the consumer electronics business into this new line of business. And so that, if we had found some other partner that had maybe more ability to invest in it, things could have turned out differently.
What was the revenue model for Stage Six? Do you remember? Was it advertising or was it something else? Was it more?
Yeah, we were.
Go ahead.
Yeah, we were looking at advertising. We were looking at paid placement. Around the videos. Basically a lot of things that are commonplace now. Bumper videos, and then at the time, this was pre-mobile revolution, right? So smartphones weren't a thing yet; they were just getting off the ground, and it was still we were on 3G network, so you weren't pushing video over smartphones yet. And so we were looking at basically monetization around the web browser and the content.
Yeah, because I remember, if I'm not mistaken, Google bought it for like YouTube for a few hundred million. It's like $600-700 million or something like that.
Yeah.
So they saw value in it, and after a few years, when advertising the model really clicked in, they thought that was a really low valuation. So how did YouTube get that valuation from Google at the time? I mean, what was it? Were they? I don't remember. I was never a big a video content creator, so I didn't follow it. But I know from a legal's perspective, DMCA, and at the time, our law firm was dealing with that as well, representing clients on those issues. So I knew from a legal perspective, but from a business perspective, what do you think YouTube did to create that value and the attention to get Google to buy it? I mean, was it
I
because of
think,
the number of videos they had on their site was the highest, or what was?
yeah, if I recall correctly, and my memory is fuzzy, this was almost 20 years ago.
Right.
YouTube was really showing that hockey stick growth curve. And it's basically whether it was like number of videos uploaded, and it was logarithmic or exponential, or number of views, or number of minutes watched. All those curves were basically hockey stick type curves at the time. So YouTube had really gotten into the consciousness of kind of the next wave of internet media adopters. And so
Yeah.
those statistics was what really, and in my opinion, would drive Google to buy them.
Yeah, so was it maybe because you guys were really focused on quality, high quality video compression, meaning high quality content, as opposed to YouTube, where it was more like get the content on there. It doesn't really quality wasn't the priority for them. It was more eyeballs, more number of videos
Yeah.
as opposed to number of quality videos. Was Stage Six really focused on quality at the time in terms of video content?
Stage six was stage and quality in terms of visual quality. Yes, stage six was more where you wanted to have like high resolution, high HD type content. Um, and YouTube, if I'm YouTube didn't support HD content until several years after it launched. It was all at the lower bit rates. They were I think they were more accessible in that sense. Like
Yeah,
you could throw up lots of quantity of content at standard def and lower and basically build that massive consumer eyeballs.
yeah, and I remember one of the things of articles I read back then, one of the strategies, I don't know if this is correct or not, but I seem to recall that one of their strategies was deliberately posting copyrighted material, because just to get traction, clips of
Yeah,
long clips of movies or music or concerts or things like that, just to get people to come on and use it. The
yeah,
quality wasn't all that great, but just the variety of different content that you can go on there and watch for free
mhm, yeah,
really drove it. And they just like, okay, just sue us, we'll deal with it later. It was kind of like
right.
their mantra.
It was a little bit of the Wild West, and at the time you had Napster and all of the, kind of other, BBSs and forums and whatnot that traded pirated content, right? And piracy, it always exists. It exists to this day, whether it's, back then someone recording a movie off of a cable TV onto a VHS tape and giving it to their friend, or giving it through Napster, or giving it through torrents now, or whatnot. Piracy always exists and will continue to exist. It's just how do you basically, as a business, uh, walk that fine line between like enabling piracy versus enabling technology for the consumers to do what they want to do. And
Yeah.
the DMCA is really good at that, right? It basically says if you do this as a platform provider, you're definitely enabling piracy. If you have to have you have takedown notices, you have to have this review process and all of that, right?
Right. I mean, I think you're right. It took some years for the court, particularly the Ninth Circuit, to come up with, a standard, a test to hold
Hmm.
platforms liable. In the
Hmm.
Napster case and some other cases where, whether or not you contributorily uh, allowed infringement was the standard as time passed and courts got more familiar with the technology and try to
Hmm.
complement it with the law. But this is really fascinating. So, I mean, you guys left after the IPO, and looking back, I mean, what would you say the top 3 to 5 lessons learned? I mean, one of them is what you just said was pay attention to the macroeconomics of the times to make sure that you
Hmm.
are aware of that and take that into
Hmm.
consideration when you do your business plan. What other lessons would you share that you kind of like
Yeah,
looking back now you learn and you want to share
yeah,
with the audience?
yeah. So one of the most important things I learned was people are important, and the hardest thing to do in a to build a successful startup, I think, is to get the right people, the right first 20 people in, and that sets the entire trajectory and culture of your company. And so we were very fortunate. We just had the best starting a set of 20 to 30 employees that you know we looked at each other as friends. We looked at each other as not co-workers, but like family practically. And I'm friends with many of the first 20 DivX employees still to this day, and they've all gone on to be CEOs. We have an intern who went from our intern to basically a CEO to a VC company to a partner and founding his own VC company. So that first group of 20 really determines and can really have an impact on how successful you are. Then the other lesson I learned that I kind of mentioned already is like, know what your investors want and make sure it aligns with what you want and really align. So I think that we were, again, a little bit naive in terms of setting expectations with the investors. And at least I thought that, hey, once you make it as a public company, you're done. You have free reign to do whatever you want, right? Because you've proven yourself, you're listed, right? But I learned, kind of the hard way with that's only the beginning of the life of a public company. A public company has much, much more, I don't know, accountability and responsibility than a private company ever did. We were responsible to, and accountable to our board when we were private. But once we were public, we had to report to the street every quarter what we did, right? And then there would be these analyst calls, and they would hang on the every word of the CEO as to the guidance and things. And so that level of just basically oversight and insight and putting your company under the microscope underneath the analyst was something I was wholly unprepared for as an entrepreneur. So, the lesson being, be aware of who your investors are and what they want from you as a company, and make sure they align with what you want to do as an entrepreneur. Zuckerberg did a great job of this, right? He kind of set it out straight. It's like, I'm doing this, and you're either on the train or you're not on the train. If you're not on the train, I'll find other investors, right? And so they're much more founder friendly positions now, in terms of being able to continue the vision of your company after an IPO.
Yeah, I think I would just add to that because part of it is, yeah, finding investors that align with you, but it's tough when you become public because there's many different investors buying, your stock and shares, and so aligning them with the investors is really probably impossible. But one thing that you mentioned Zuckerberg did was that he controlled all, majority of the voting shares, and so it didn't really
dual
matter.
class shares.
Yeah, so when he went public, it's like, okay, yeah, a lot of people can disagree with me because now anybody can buy my stock, but I have the right to vote and keep myself in as CEO. And I think I don't know how he did that, because I don't know how investors at the beginning agree to that, because most of the times they will untangle and make you give up those rights as part of the investments. But in this case, they didn't. So he's one of the rare situations where you go public and you don't really bear the consequences of going public, but you can do what the heck you want. And it turned out he
That's
got
a great point.
a revenue model. Yeah. So this is what I tell, and I tell clients all the time, startup founders, that you guys should think about, if you do get investors, make sure they align with your vision. And even and just as a backup, if you can, try to retain as much control through the shares as much as possible, or different types of shares where you have different voting structures. It gets complicated at the beginning, but if you don't think about it, near the beginning, it gets even more complicated, and you lose a lot of your ability to steer the company's basically vision and mission down the road.
Yep, exactly.
So we're getting towards the tail end of the show. We usually stay on for about an hour. What are you doing now, Tay? I mean, such a fascinating story and all this experience. Are you on another startup, or are you advising startups, or what are you doing these days?
Yeah, mostly advising. I did DivX, got really lucky early on in my career, and then was really fortunate to work in a lot of different industries. I'm like, and another thing I tell folks is like, be continuously curious. I've worked in energy, I've worked in internet media, I've worked in healthcare, I've worked in nuclear fusion, I've worked in consumer devices. So currently I'm working primarily as an advisor to startup companies. So I spend a little time, part-time with a bunch of, not a bunch, more like a handful of companies, just giving advice and helping them in technology strategy, business strategy, and the ones I enjoy most is the ones that I am able to get my hands dirty and actually work with the teams themselves and be, for lack of a better term, embedded and contribute something that's tangible other than pretty PowerPoint slides or fancy Excel spreadsheets that throw up nice up and to the right curves, right? Anybody can create those. But if I can get my hands dirty and work with people, on the ground, that's what I enjoy most.
I think you're right. So is there a startup kind of environment in Minnesota, or are you seeing, more of your work come from California and San Diego where you were based before?
Yeah, I've only been in Minnesota for like 2 months now, so a lot of the work is just with the friends and the companies that I've made in California.
Okay. Yeah. So how about Vietnam? Have you ever thought about connecting and sharing your experiences with startup founders and tech founders in Vietnam?
Well, that's why we're talking, right? So yeah, you and I met through a mutual friend, and um, as uh, fortunate as I have been in my life and in my career, I feel it not only a responsibility, but also a great joy to give back to folks. So I do a lot of mentoring. I try to, I'm involved with Founders Institute in San Diego, trying to mentor, folks through kind of this entrepreneurial journey. And then that's when we started talking and saying, well, it would be fantastic if there are things that I can do to help the startup community in Vietnam. So I'm here, I'm talking with you, and I'm obviously open to further discussions.
Yeah, that's great. I mean, especially now with the heightened diplomatic relations between the U.S. and Vietnam, the Commerce Department, the State Department put out a fact sheet, and if you read that, it's about 8 pages long, and
Mhm.
there's a lot of opportunities for tech there, a lot of collaboration that can happen between the U.S. and Vietnam, and I'm looking forward to it. I think TechX, we had the conference this past June, and it was received well, and the community wants to have it again next year. So I'm looking forward to working with you and bringing TechX 2024 back to Saigon. And then I guess we can talk about
Awesome.
more of that. Yeah. Well, thank you
Yeah.
so much,
Yeah.
Tay, for joining us and taking time out of your day and sharing your thoughts. And I'll connect with you offline.
Yeah. Thank you, Hui. It was a pleasure talking with you.
All right. Take care. Bye.
Okay. Bye.